Daily chart, we have consecutive bull bars, and it's good for the bulls. And obviously today is forming a disappointing follow-through bar for the bulls. No surprise. Looks like the market is, we had a decent bull bar on Wednesday, but a little bit climactic, and then followed through Thursday. Now we're starting to pull back. I still think the odds favor the bulls getting, some kind of second leg up. So whatever reversal down we get is probably going to be limited. And ultimately, I think ultimately we'll get up to the all-time high and 7,000, somewhere back up in here. But I think we reached the minimum. 6,900 was around the midpoint of this trading range that began back in October. Coming into today, the market formed a trading range going into yesterday, and then we gapped up on the open. And when we gapped up on the open, and the market tried to break above yesterday's high and it reversed down. Bar one being a reversal bar, thought that increased the odds that we were probably going to get some kind of second leg down, and ultimately we'd probably try and close this gap down here to follow through consecutive bear bars 1 and 2. Good for the bears, increase the odds we're going to get a second leg down. And then 3, we have a bull bar with a tail above the bar. Not a great buy above, probably sellers above, and at least a small second leg down. And then 4, we have that second leg down, but tail below, 1 second. Tail below 3, tail below 4, probably limits the downside. And then 5, we found buyers below 4 and we reversed up. Strong enough bar that I suspect it increases the probability it will probably test back to the high of this bar over the next couple of bars. So some traders will buy it and they'll scale in lower, betting that the market will test back to that location. Not a great entry bar. 6, you have some bulls, they bought above 5, disappointed 6, they'll look to get out break even on 7, and then 8, and then 7. Instead of testing up to 6, the market reversed. The market sold off. However, probably buyers below 5. And we'll probably test back to the 5 high over the next couple of bars. And you can see that's what happened over here. 7, not a great bull bar, so probably limited upside. Same thing with 8, but I suspect there's probably more traders buying below 8 rather than selling it. And then 9, outside up, good bar for the bulls. Probably going to go at least a little bit higher, but I suspect we're probably not going to go a lot higher. And then 10, follow through, consecutive bull bars, 9 and 10, good for the bulls. Probably going to get at least a small second leg up and test the bar 1 high. And then 11, we have another follow through bar. Good for the bulls, increases the odds that we test up to the upper third of 11. But big bar 9, smaller bars 10 and 11. That lowers the upside potential, increases the odds that will probably pull back fairly soon. And then 12, another bull bar, good for the bulls, but I suspect the upside's limited. And then 13, we broke above the 1 high and reversed down. Climactic bar on 13. What about selling below it? Well, you're selling after a fairly tight micro channel, the 9 low to 13 high, and therefore that'll probably limit the downside. But even though it limits the downside, I suspect whatever bar we get on 14 will probably limit the upside. And then you can see bears got follow through selling on 13 with 14. That's good for the bears, but now we have a weak high 1 buy, and that increases the odds of sellers above the bar. And 15, you can see what happened. Relatively big bar closing the gap. That's more confirmation that the market is in a trading range. 15, relatively big bar with big risk, so I suspect the downside is limited. Just like we had this gap here, the high of bar 8, bears scaling in higher, making money. We have the gap, the low of 13 and the low of 14, bulls buying more lower. They will probably make money as well. Because of that, I suspect downside's limited, and we'll probably close this gap. And then 16, we closed the gap. The market, I say that. It looks like we didn't quite close the gap. We tested near the 14 low, but we didn't quite reach it. And then inside bar 16, not a great sell below. Probably more traders buying below rather than selling it. And then 17, we have another inside bar, but again, consecutive inside bars, basically a triangle, and in the middle of this overall trading range here, not really a great location for the bulls or the bears, so probably buyers below scaling and lower. And then 18, we went outside up. That's good for the bulls. It's an outside bar, but context is really not all that great for the bulls. The bears who sold below 17, some of those bears will sell more higher. And because of that, there's increased risk that we test back down to the 17 low. Now we have a bear inside bar 19. It's basically a second entry short after the bear breakout on. It's basically a second entry short after the bear breakout on 15. So it looks like we may test down to the 17 low. And then bulls, they tried, but they found buyers below the low 2 on 19, and we went outside up. Outside up, we have another outside bar, 20. It's a second leg up after 18. Good for the bulls, but look where you are. You're in the upper third of today's range, and you're trying to break, and the market's trying to break above yesterday's high once again. That increases the risk there might be more sellers up here rather than buyers. And then we have another bull bar. So we have reversal and follow through 20, 21. That's good for the bulls. Not lowers the probability bears will sell below 21, and that the bulls will probably get a second leg up. And then bear bar 22, not a great sell, so probably buyers below. But now we have another bull bar 24. And now we have a parabolic wedge with 18, pause, 20, 21. That's second leg, pause, and then third leg up with 22, 23. And this last leg is a wedge here with 1, 13, and bar 22. And that lowers the probability for the bulls and increases the risk that the bulls buying up here may get trapped. 24, a little bit of a surprise. Surprisingly strong, reversal down, increase the odds we can go at least a little bit lower. 25, a bear breakout and follow through. 24, 25, probably sell the close and going at least a little bit lower. We have a wedge, probability, odds favor a second leg down. And another bear bar, so good for the bears, probably going to go lower. And then we have a doji, 27, but not a great buy above the bar. Increase the risk that there's more sellers above 27 rather than buyers. 28, breakout, pullback, sell, probably going to go at least a little bit lower. And then 29, we have a bear bar closing on its low. Good for the bears, probably going to go at least a little bit lower. Follow through after the low 1. That's good for the bears. And then we got 30 is another follow through bar. But now we have 3 bars in this leg, pause, and 3 bars in this leg. So the downside is probably limited at least for a few bars, and we may have to bounce. Doji, 31, probably not going a lot lower, but probably going to bounce, which we did. And then we got 33. 33, a bull bar, reversal up, good for the bulls, but I suspect the upside is probably limited. There's probably more sellers up here rather than buyers, so probably not going to go that much higher without at least first having to test down and form a double bottom. And then we got the bear bar, 34, but not a great sell, probably buyers below. 35, bull bar, but I mentioned it's a weak high 1, and therefore there's increased risk of sellers above, and a test back down to the 31 low. 36, bear bar, closing on its low, probably limited downside, and then 37, follow through, but really not a great location for traders to be selling. There's probably buyers not far below. And then we have a bear breakout below the 31 low and the 37 low. Good for the bears with fairly tight bear micro channel, so the first reversal up might be minor. And then 39, we have a decent bear bar, but a little bit bigger than past couple of bars. And then we got that bull bar on 40. 40, bull bar. That was a warning that the upside was probably going to be limited for the next several bars. And then 41, follow through, consecutive bull bars, 40, 41. Increases the odds of buyers below in a second leg up, testing the 33 close. But we may have to test all the way back down to the 39 close before we do that. And then we got the doji, 42. Not a great sell for the bears, not a great buy for the bulls either. And we may end up pulling back here. And then we got the surprise, 43. Strong enough bar, 43, we may get a small second leg down, but I suspect the downside's probably limited. 44, not a great buy, but you're in the bottom third of the range, so it's a dangerous location to be selling. And the bulls got consecutive bull bars, 44, 45, good for the bulls, but we still may get a second leg down. And that's what the bears got with 46.47. 46.47, its second leg down, falling below 44. But weak low one short, 46, probably buyers below 47, not a great entry bar. Then we went outside down on 48. 48, bear bar closing on its low. The bears are trying to continue the bear channel, but I think the bears have too much buying pressure. And you can see ultimately what happened. The bulls, they had a decent reversal up to 53. And 53, the rally from the low at 49 to the high 53, I thought that was strong enough that the odds favored a second leg up. 55, bear bar, but I suspect the downside's probably limited. 56, doji, not a great sell, so probably buyers below. And the bulls got their second leg up with 57, 58, and 59. 58, good entry bar. 59, weak follow through. Now we have two legs up and a possible double top with 41 and 59. Really, I think a dangerous location for bulls to be buying. Increased risk, we may just go sideways here and ultimately reverse back down. And then the bears, they got the pullback down to 56. Not a great sell, 59. But because it was a trading range, made the comment, it's a more dangerous buy. And then 60, 61, 62, the bears are trying to get the reversal down. And they just can't seem to get it. And then 63, bear breakout, breaking out below 56, but tail below the bar, probably buyers below. And then not a great buy signal bar, 50, 65 or 64. Not a great sell signal bar either. And then bull bar closing on its high, 65. The bulls, they had a higher low, double bottom, higher low, major trend reversal, bear trend, and then a higher low, which is double bottom. So it's okay, but it's not great. If you're buying in the middle of a tight trading range, right at a flat moving average, really not ideal. And then the bulls try to get the upside breakout with 67 and 68, and then the market failed. And instead, the bulls got a second leg up with 69. Good bull bar, 69, but climactic. And then the bulls that bought it, they were disappointed with 70, and then 71 went outside down. And then you had bears selling below 71, and some bulls selling out of longs below 71. And the market went sideways down for the rest of the day. You can see what happened. Late in the day, those bulls who bought anywhere up here, as long as they didn't panic and they bought more lower, they ended up probably being able to get out, break even. For stop orders, you can probably sell below 1, but if you do, you probably get out above 5. And then bulls, they can buy above 5, but really, I think not great probability. Some bulls, they'll buy above 9, but same thing, not a great bar to buy above. Relatively big bar, big risk. If you do, you probably get out below 14. Otherwise, you probably hold if you're still long below 15, but not ideal. And then what about up here? I think bulls, they definitely get out below 24. We have a wedge. Bears can sell it, or they can wait and sell the follow through 25, 26, probably okay. And bears, where do they have to get out? I don't think they have to get out above 32. I think it's okay. I think they definitely get out above 40. I think it's a dangerous bar to hold above. And then at this point, you're in a trading range. If you get out of shorts above 40, I think it's tough to sell again below 43. You're selling in the bottom third of a trading range at that point. Bulls, if they buy above 40, they're buying a fairly tight channel. Some will get out below 43. I don't think they have to, but if they do, they probably buy again, certainly above 50. And then bulls, if they get out below 55, they definitely buy again above 57. And if traders get out anywhere around 59, 60, they probably get long again above 65 at a minimum. Those bulls, if they get long, they probably get out of longs below 71. For limit orders, lots of limit orders. Probably buyers below 3, buyers below any of these lows, even buyers below 6. And I thought sellers above 1, and then fading gaps. So when the market rallies for a couple of bars and you're far from this breakout point here, you'll have traders selling, especially small bars, betting that the gap will close. And they'll do the opposite up here. Decent bull bars, when you get a sell-off down here, they'll buy, betting this gap will close. I thought sellers above 22, sellers above 13 for a couple of legs down. I thought sellers above 27 for a second leg down. That made sense. That sellers above 35, but it never triggered. I thought buyers below 31 if you could scale in lower. Probably buyers below 42 if you could scale in lower as well. and then buyers below 46. That made sense. I thought buyers below 54 scaling in lower. I thought sellers above 54 on the retest of the 54 high during 58, 59. I thought buyers below 56, 57 during 63 made sense. And then, up here, I think it's really tough to buy. You could argue buyers below, but you see the difficulty. Traders buying here, they probably have to buy more below 63. Buy the close, sell the close. I thought probably really the only buy the close, sell the close here was selling the close, maybe 25, 26, even selling the close 27. All that made sense. And that's pretty much it for buy the close, sell the close. Everything else was opposites. Or, if you see consecutive bull bars, you can sell it betting on a pullback. Or if you see a big bear bar closing on its low in the bottom of the range, you buy the close, willing to scale in lower. Big bear bar 55, buy the close, betting on a bounce. Those made sense. And that's probably it for buy the close, sell the close. Most of the time in the market's in a channel, instead of buying or selling closes, it's better to wait for pullbacks. How do you classify the open? Is it an opening reversal or a trading range open? You think about it as a trading range open, and obviously you can call it an opening reversal if you want. But for me, I think about it more as a trading range type of open, because we gapped up, we sold off, rallied, sold off, rallied, and we ended up forming a wedge and selling off. But all trading ranges are, when you see the reversal, in this case, it's a bull channel, but it's a trading range. And when it reverses down, it's always going to form some variation of a major trend reversal. And it's going to be the opposite when you're in a trading range. That's a bear flag. Like here's a bear flag, and it's a trading range, but it's inside of this bear sell-off here. And so when it got this sell-off here, it's trend resumption. So the bulls failed to get the major trend reversal, and they got trend resumption. Obviously, the trend resumption led to a larger major trend reversal down here, and ultimately the bulls got a reversal up here. But even this reversal up here led to more trading range behavior. But to answer your question, no, I did not see it as, I didn't really classify that as an opening reversal. Okay, question, what are your thoughts on a stop order buy below bar 22? Is that dangerous? Does buying on a stop what are your thoughts on a stop order short at bar 22? Yeah, you could do that. 24 had enough energy going down. Traders selling below 22, selling below 23. I don't have a problem with that. For me, I'd rather sell below the bear bar, so I'd rather wait, see a strong bear bar closing on its low, and then look to sell. Where do we go next week? Well, next week, we have a decent rally, but far from the moving average here, and a doji. I suspect we'll probably get a small second leg up, but so probably buyers not far below. But there's probably sellers not far above this bar. So I suspect the upside's probably limited, and we'll probably have to start going sideways for at least a couple of days at a minimum. But overall, it looks good for the bulls, probably buyers and at least a bounce. Okay, thanks everyone, and I hope everyone has a great weekend.